So, what if I told you that you could own a piece of the entire Indian stock market? I'm talking from the biggest giants to the smallest up-and-comers for less than what you'd pay for a movie ticket. It sounds a little crazy, right? But today, we're going to break down a really powerful and incredibly simple way to do exactly that. Let's start with our key number, 500 rupees. The whole idea here is pretty simple. By investing just this much across 3 very specific tools called ETFs, you can essentially buy a slice of the entire Indian economy.
Now, you're probably wondering, how is that even possible? How can such a tiny amount of money give you access to hundreds and hundreds of companies? Well, we're going to unpack it step by step, and it all comes down to a really straightforward 3-part strategy.
Okay, so step 1. First, we need to focus on the foundation of the Indian stock market. We're talking about the largest, most well-known companies. The household names that really form the bedrock of the entire economy.
In the world of investing, we call these large-cap companies. You can just think of them as the giants, the top 50 most valuable and stable corporations out there. And they're all grouped together in an index you've probably heard of, the Nifty 50.
So how do you invest in all 50 of them at once without buying 50 different stocks? Well, you use an ETF called Nifty Bs. And the beautiful thing about this is its simplicity. For about 250 rupees, just one unit of this ETF instantly gives you a tiny share in all 50 of those top companies. Just like that.
All right, we've covered the giants. But the market is so much more than just the top 50, right? So let's move on to the next layer, those dynamic mid-sized companies. These are what we call mid-cap companies. Think of them as the rising stars. They might not be as huge as the Nifty 50 companies, but wow, they often have tremendous potential for growth and innovation. They're a really crucial part of any diversified portfolio. Now, to cover this entire segment, we look to our second ETF, the Nippon India Midcap 150. And just like the name says, this single investment tracks the performance of the top 150 mid-sized companies, giving you really broad exposure to this high-potential part of the market. Okay, we've got the large and the mid-size covered. Now it's time for the final piece of our puzzle, the smallest companies, which are often the fastest-moving ones. Yep, these are the small-cap companies. They're the smallest publicly traded businesses out there. And while they can be a bit more up and down, a little more volatile, they also offer some of the highest potential for growth. Capturing this segment is absolutely key if you want to own the entire market. And for this, we have our third and final ETF, the HDFC Nifty's Small Cap 250. This one is designed to track the 250 most significant small cap companies. And would you look at that price, around 140 rupees. That's incredibly accessible. So we have our 3 building blocks. Now let's put them all together and see what our complete portfolio looks like. And here it is, in just 3 simple steps, you've built a portfolio that basically mirrors the entire Indian stock market. You've got Nifty Bs for the top 50 giants, the Nippon India ETF for the 150 mid-sizers, and the HDFC ETF for the 250 small innovators. And here's where it all comes together. The Nifty Bs is about 250 rupees. The HDFC Small Cap is about 140. Together, that's under 400 rupees. So even when you add in the mid-cap ETF, your total starting investment to own the whole market is incredibly low, easily starting within that 500 rupee range.
And this is the main takeaway, the whole point. The power of this strategy is something called instant diversification. Instead of trying to pick individual winning stocks, you just own a piece of them all. This spreads your risk out and gives you a stake in the overall growth of the Indian economy, all for a tiny initial investment. The original source for this strategy made a great point. They said, so you don't forget the names of the ETFs, you should save this information. And it really just underscores how simple, yet how vital these tools can be for someone just starting out. Which really leaves us with a final thought. We often think of investing as this super complex world, right? Something reserved for experts with a lot of money. But what if the very first step, the one that gets you ownership in the entire market, really is this straightforward and this accessible? Something to think about.